As an algo trader, I am a big fan of patterns because they can easily be programmed and tested, and then if they work properly, you can easily build strategies around them. Today's video is about bull and bear hooks. These patterns comes in different flavors depending on who is the name behind it. So I know Toby Crable has one, Joe Ross has one, and Thomas Polkowski, and probably many others. But they all revolve around the same thing, which is usually a pattern that looks like a hook. You know, the fish hook to hook traders on the opposite side. So I simplified two of them and we will test them in this video. And this is what the bull hook looks like. So like I mentioned, it looks like a hook. So think of it like a check mark flipped on its side. We usually have a downtrend, and then the last bar, which is today's bar, is an up bar, and it's a smaller range than yesterday's bar. And it's also an inside day. So the high is lower than the previous high, and the low is higher than the previous low. So once we find this pattern, we buy with a stop order above this high because we're in a downtrend and we want a confirmation to go long. And the second variations of the bull hook is the kind of the opposite. So the hook looks like this, and the pattern setup is a up bar, and then today is a down bar with a range smaller than yesterday, and the open above the previous high, and the close below the previous close. So this pattern requires only 2 bars, and this pattern requires 4 bars. So let's build these patterns and test them. So I will build this pattern in StrategyQuantX. I'm running version 139 here. And we are in Algo Wizard, and here is the pattern as represented by this picture. So we have 3 lower lows, and this is the low. Lower than the previous low is true for 3 bars. So you can find this in the comparison. So if you go to comparison and you go to lower for X number of bars, you click that in and you select 3 bars. And you can allow the same values. So basically, if the low is the same as previous low, then that's okay. And then we want to shift by 1 because we are calculating everything on this bar. So on this bar, I want to make sure that I had 3 lower lows. So that's why you need the shift. And this is what I have here. So you see the shift is 1. And then the range is smaller than the previous range. So this is the bar range, lower than the bar range 1 bar ago. And then an inside day, meaning the high lower than the previous high and the low higher than the previous low. Again, here we look, the low is higher than the previous low, the high is lower than the previous high. And finally, this is an up day. So the close is higher than the open. And I'm using TradeStation engine with es.d data. So es.d is the S&P 500 E-mini futures. We have the data here since 2006, and we are using a fixed contract to trade, no slippage and commission. This is just testing. So let's run a full backtest. And this is very strange to me. So if you watch any of my videos on the channel, you know that the S&P 500 works really well with mean reversion strategies going long. And this is basically a pattern that is a mean reversion pattern because it's a pullback. It's 3 days pullback, and then you go long. And I've tested hundreds of these patterns, and usually anything with a pullback works really well. So I am amazed that this pattern, first of all, it's losing money. And second of all, we have only 15 trades. And that made me think that there's something wrong with the logic. So I went ahead and tested this on another platform, which is multi-charts using EasyLang. And this is testing the strategy in multi-charts using Power Language. And we have the same thing. So it's 15 trades, losing $260 on average. Okay, so even though I confirmed that this pattern, it is producing 15 trades, it's still like, I don't get it. Like why this is happening. So let's dissect this pattern and let's see what's preventing more trades from happening. Obviously, it's not the pullback because, you know, all the strategies that I build on the S&P 500 using mean reversion, and they're all a form of pullback. 3 bars, 5 bars, even 10 bars. Like the RSI 2, that's a pullback of many bars. MACD, the Bollinger Bands, they're all pullbacks. So it only makes sense that to test only the last bar. That's, it seems, the bottleneck. Okay, so let's remove everything. Let's keep this one. This is the pullback. And then we'll remove everything and start adding them slowly to see which one is the culprit. So in StrategyQuantX, right now I don't have a short strategy. So the easiest way, instead of deleting, you can just pull them in the short exit because we don't have a short entry. So these basically, they are null. They will not produce anything. And let's run the full strategy now. Okay, so this makes a lot of sense. We have about 200 trades. We are basically waiting for 3-bar pullback and we are trading the day after. Remember, there is a shift of 1 here because of the pattern. So remember, we are taking the signals after this bar. So even when I remove it, I'm still waiting for a bar. The long entry is enter at a stop, like I mentioned. We are entering at a stop order at the high of the bar. And I am exiting after 3 bars. So now that we know this works, which of course makes a lot of sense, let's start adding. I will start with the close greater than the open. So this means we have a green bar today. So let's pull that in and let's test. Okay, so this is definitely one of the culprits. So, but we still have 150 trades, so that's not all of it. And so let me take that off. And then we have the bar range. So this is the range of today smaller than range of yesterday. So this is acting as a good filter because we have less profits, but we have better return to drawdown. So this is definitely a good condition to keep. And finally, let's try the inside day. So we bring back the high and the low. So this is the inside day and let's see what we get. And this is definitely the other culprit. So the inside day and the green day, they are what's making this pattern produce lower trades. I mean, let's add the up bar and let's see, and from 28 we go to 15, definitely. So these two, it's what messing this pattern. So if we go back to the pattern, it's the fact that it's an up day, a green bar, and also an inside day. Remember, we are looking for a smaller range. So we know the bar will be smaller than this one, but we are requiring it to be an inside day, meaning inside this bar. That's why we have very few trades. Okay, so we keep the 3 lower lows and the last bar is a small range. And then we enter at a stop order for the high of the day before today. And then we hold for 3 bars. And that looks like a really good pattern on the S&P 500, which of course is very expected. And we can see the trade, average trade is 550, 64% win rate. That's totally expected. And then the equity chart looks like this. Of course, we can add a filter to enhance these drawdown and then trade analysis. Also, we can check it on the charts here. So we can pick this trade. So you see we have 3 lower lows and then this guy is a smaller range. And so we enter next day at the high of this bar. So it's a stop order. We enter and we hold for 3 bars. We exit next day. And then the next trade, these are 3 lower lows. And now, even though this bar is higher than this, but still the range is smaller. So we enter at the high of this bar, which is, of course, it was the open. We hold 3 bars and we exit. And let's look at the next one. Here's the next trade. So we have 3 lower lows. The next bar, smaller range than this one. And we enter at the high of this bar again, which was the open because it's already above it. and we hold for 3 bars and we exit. So the code is behaving properly. The strategy is good. We already know this pattern is good. But remember, this pattern now is adjusted. So we don't need this bar to be an up bar, and we don't need this bar to be an inside bar, only a small range. And this pattern will work. And now we will program bull hook 2. So first we need yesterday's bar to be an up bar. So the close of yesterday is higher than the open of yesterday. And then today's bar is a small range. So bar range of today is smaller than the bar range of yesterday. And then the open higher than the previous high. So the open higher than the previous high. The close lower than the previous close. The close lower than the previous close. And finally, we will enter at a stop order of high of today. So this is different than the other pattern where we enter of the high of yesterday. But because we are opening above the high of yesterday, so we need to use the high of today. So again, the long entry, we are using a stop order with the high of today. And again, we are exiting after 3 bars. So let's take the signal, and I'm using TradeStation, same data, the ES E-mini futures, and I'm using 1 contract, no slippage and commission. So let's run a full test. And again, this is very puzzling. I mean, we have about 18 years of data, and yet we have only 23 trades. And this is a 2-bar pattern. I mean, you expect this to be probably happening, I don't know, at least 200 times. Really, this pattern only happened 25 times? So again, I tested the pattern in another platform, multi-charts, using Power Language, and we get the same results. Now, this time, while still puzzling that I'm getting only 23 trades, but remember, this is not a pullback now. So it's like a breakout. So the bar is up, and just we have like a hook down, and then we want to go up again. So it's a breakout strategy, and we know that breakout strategies don't do well on the S&P 500. Still, like, the number of trades is very low. So again, let's try to find the culprit why we are getting a very low number of trades. Unfortunately, this time we don't have a lot to play with. I mean, we can play with this one and the range, but the hook is based on these two, so we cannot remove these. So again, I will move them to the short exit because we don't have a short entry, so this will not have any effect on the strategy now. And now basically we are using the hook, so we don't care if yesterday was a down day or an up day. It doesn't matter. We only care that today's open is above previous day high and the close below previous day close. So let's run it. Okay, so this is much better. 62 trades. It's still not a lot of trades, and you know, the performance is nothing to write home about. Even if we add a filter, that's already going to go down probably to 30 trades. So it's not usable. I mean, this hook is not usable, at least on the S&P 500. But you already probably figured out that flipping this pattern should produce very good results on the S&P 500. So if we flip it, which is the bear hook, so the bear hook usually is used for short strategies, but of course we can use it here for long strategies. So this is what it's going to look like. We have a down day, then the open lower than the previous low, the close higher than the previous close, and then we buy with a stop order above this high. And also the range is smaller than this range. And here is the pattern built. So the open is lower than the previous low. So this open lower than the previous low. The close is higher than the previous close. So this close higher than this close. And then the range is smaller than this. And then yesterday, this one, the close is lower than the open. Again, I have the same data, the S&P 500 E-mini futures using TradeStation with 1 contract fixed and no slippage and commission. And as expected, the pattern is profitable, but again, very low number of trades. So just like we did before, let me get rid of the yesterday condition that's being down day, and let me get rid of the bar range. So we are just looking at the hook. Basically, we just want the open below yesterday's low, the close above yesterday's close, and then we enter with a stop order. So 24 trades. Let's see if we can beat that, and much better. Now, still the pattern looks horrible here, but we have more trades. At least I'm happy with more trades because I can always add a filter to enhance this. So this one looks like a good filter. The close lower than the average close of 10 bars. So we get 42 trades and 3.93 return to drawdown ratio, and we get rid of this huge drawdown in the beginning. Now, I didn't test any filters. This is just a simple one. I just wanted to show you that once you have a lot of trades, it's a lot easier to filter trades. The problem is always lower number of trades. Now, the beauty of StrategyQuantX is you can take this pattern that we just built and make it as a custom block. Once it's a custom block, you can use it in Builder to automate building strategies using this pattern as an entry or exit or a filter for other strategies. If you like this video, you will love the next one.